Welcome to the Brandon Lakey Show. Hey, good morning. Welcome, everybody. Thank you for joining the Brandon Lakey Show, Compounding Communities. This show is brought to you by WealthWave, the How Money Works Company, and Revolt Healthcare Alliance. Good morning. I appreciate you guys tuning in. Thank you for joining. We've got an exciting show today. Today is going to be what we call the healthcare episode, all things healthcare. So if you're a teacher, if you have health insurance, if you pay for health insurance each month currently, there's going to be some nuggets here that I promise will add value to your life, things that are impacting you right now. There's some statistics, some interesting things that are happening in the healthcare space. It's an ever-evolving space, and so this will be the healthcare episode. So what I want you to do is if you take a listen today and you hear anything that you think might benefit someone else, if you have teachers in your network, if you know people who might find some value in this, you know, my goal with WealthWave, if you've listened to any of our shows, you know that WealthWave is the How Money Works company. And so my personal goal when I meet with my clients is I'm trying to help preserve every dollar, find every dollar in a budget that we can possibly find so that we can help a family. Because if someone's paying too much in one area or another, every dollar they're paying too much, or potentially every dollar you are paying too much, could be going somewhere else. And if you've heard some of our past shows about the rule of 72 and compounding interest, and if you've reached out and gotten one of our books, our How Money Works books, and you've read about that, then you know how powerful every single dollar that you have growing, working as hard for you as you are for it. You know how powerful that is. So I'm excited today because we've got some pretty cool topics. So before I get into bringing our guest on today with our healthcare expert, before I do that, I want to introduce myself for those of you guys. If this is your first time listening to the show, welcome. My name is Brandon Lakey. I'm a senior broker with WealthWave, the How Money Works company. We've got offices scattered around everywhere, but I personally have an office here in Plano, and I live in Melissa. So I started the show Compounding Communities for the reason of I moved to the area in August, not exactly in a time where people were out and about in the neighborhood meeting people. We were all on quarantine and lockdown. And so what I saw in the North Dallas area was some incredible communities, some incredible places that for most of us, I say most of us in our communities have moved here from somewhere else. There's a few, original Plano and original Frisco people and original, McKinney and Melissa people and Anna people. But for the most part, a lot of people are move-ins over the last 5 to 10 years. And really in the last few years, a huge population boom, right? So if you're in that group, you probably brought your family here because you saw the opportunities, you saw the beautiful area, you saw the amenities, you saw all the things, the opportunities for our children. And so you moved here. So I grew up in a small town, and one of the things I loved about that small town was the sense of community. The drawback of a tiny small town was that you didn't have a lot of amenities. You had the egg roll mobile, you had a Dairy Queen that took about 75 minutes to get a cheeseburger combo, if you were lucky. And then you also, you just didn't have many amenities. So we've got a lot of amenities here in this area. But what I'm trying to do with our radio show is to preserve that small town feel, to give all of us some names and the ability to know people in the community, which is a little bit tough right now. The interesting thing that has happened over the last year or two, as you all know, is that meeting new people has been tough. So if you've moved to the area, one of my goals for my show is to highlight local people in the community. And a lot of times we kind of lean towards small business owners, but just so you know, if you're listening, it doesn't have to be a small business owner. If you are a leader in the community, maybe you're running a karate group, maybe you're running, maybe you are in a running group, maybe you're in a CrossFit group. If you've got a group like that and you guys are doing awesome things in the community, I'd love to feature you on the show. And so along with that mindset of connecting and compounding our communities, if we all are reaching across, shaking hands, meeting each other, and building these strong communities, well, this is going to continue to be an incredible place to live for our families. And I say our families because I live in the community as well. So that's a little bit about the mission for why I started Compounding Communities. Myself, I grew up in the Houston area, went to Texas A&M, really had a great time in College Station, loved all things Texas A&M and still to this day do, and bleed maroon, and made my way through I was a teacher for a couple of years, made my way through the tech industry, oil and gas technology, before making the transition and moving over to the financial education space. Been doing it about 7 years now. So something I'm very passionate about. And if you've listened to our show, you probably picked up on that. So with that being said, we've got some pretty cool announcements before I bring on our guests. The first announcement is, we had such a resounding response, such an overwhelming response to our giveaway that we ran over the last couple of shows. We're actually going to do it again. We're going to do it again. And this time, the giveaway, it's going to be a little easier to qualify for the giveaway. So if you listened to it last time and maybe you thought about reaching out but didn't, the giveaway this time is very simple. We are doing just basically 10-minute educational, informational conversations where we give you a book. We show you 2 concepts that I think will add value to your life. Basically, just a way for me to say hello and introduce myself to you. If you reach out and we schedule a little 5-10 minute conversation, just basically say hello. This is obviously new entries only. If you're a current client, I appreciate you, but can't have you enter in this. But for new clients, new people, even if you just want to get a book, you just want to say hello, say, hey, listen, I would like to get a copy of this, maybe learn a little bit about what you guys do. Reach out, and then you'll be entered for the drawing. So we want to put that graphic up there. The drawing is for, drum roll, airfare and 2 nights at a hotel with accommodations. Now, I had a conversation with my wife about this, and she said, well, I bet there's some people that probably think that's some kind of gimmick. It's probably one of those things where you go and then there's going to be some guy headlocking you, trying to ask you to write a check for 40 grand for some type of timeshare. It's not. This is just airfare, 2 nights in a hotel for you and your sweetheart, or for you and your significant other, for you and a friend, whoever. And so pretty easy to qualify for it. Just reach out. We'll get you scheduled, a little 5-10 minute conversation. I'd love to introduce myself to you, tell you, a little bit about what I do, show you a concept or 2, give you a book, and then, we'll get you entered into this. And I'm excited to hear about some of the awesome trips that we send people on. Next thing is, before we bring our guest on, is the How Money Works book. If you would like a free copy of the How Money Works book, reach out, put hashtag compounding communities. We'll reach out to you. We'll either ship you one, or if you want to have a short conversation, we'll enter you in the giveaway. So pretty easy there. You don't have to do that, but you can. And so with that being said, I'd like to talk a little bit about, for our segment called Compounding Communities, I'd like to talk a little bit about the hot topic of life insurance. Now, some of you instantly, your brain's like, boop, nope, I don't want to listen to this because it's not much fun to talk about. But hey, listen, it's one of those things that has evolved massively over the last 10 years. So what I want you to know, I want you to think about what phone you have riding along with you right now. You're riding along in the car, you're sitting at your office, wherever you are. What phone do you have currently? Now, imagine if you were carrying a Nokia, the old blue Nokia brick phone, or maybe you got the iPhone 2. And imagine if you were carrying that around and you're walking around the mall and, people are looking at you like, hey, why are you carrying that old Nokia brick phone? Or even worse, why are you carrying that old bag phone? For some of you, you remember the bag phones. Why are you carrying that old bag phone? And if you said, well, what are you talking about? This this is the best thing. This is the best thing out right now. This old Nokia phone, it's the best. It's black and white screen. You can't text, you can't pay your bills or check your bank account, but it's the best. People would probably look at you kind of funny, like, well, you do know there's like, Androids and flip phones. And now I saw an advertisement for one with the color screen and the whole screen flips. There's iPhone 12s, about to be iPhone 13s released in September. What are you doing carrying that old phone? And imagine if that person was super stubborn and said, no, I won't even entertain something new. That's silly, right? For all of us, every year or so, we upgrade our phones. And so in the world of in the world of life insurance, there are times where products get updates and they get better features. And this is one of those situations. So life insurance now, a lot of people have what you would call the old type of life insurance or standard type of life insurance, where you kind of had to die to use it. Not much fun to talk about. There are new types of life insurance out there that have some pretty cool, attractive features. One of those features being living benefits. Living benefits means that if you qualify for the living benefits, you're talking about the life insurance paying you money while you're alive, or maybe paying you money for your loved one while they are still alive if they have a heart attack or a stroke or even get cancer. You think about how many families we know that are affected by cancer. Sadly, it's a tremendous amount of families. And how many of those families go through significant financial turmoil because of the cost of cancer treatment? A lot of stuff that's not, that's above and beyond, maybe not even covered by insurance, it gets pretty crazy. So with that being said, living benefits can be tremendously valuable. Very easy to have a conversation and look at what someone has and see if you might be eligible to upgrade to something with better benefits. And in some cases, by the way, it's gotten cheaper. In some cases, it may be cheaper for you to upgrade to a newer type of coverage. We're talking temporary or permanent type coverage that has living benefits. Last section I'll touch on here is long-term care. You may not have heard of living benefits or long-term care before today, and if so, that's okay. But studies show 7 out of 10 people are going to need long-term care, and 1 out of 10 people have it. So what is long-term care? Well, very quickly, long-term care is monies that will be paid to the client if they have a qualifying, if they qualify for the coverage. Now, sometimes that can be losing 2 out of 6 daily living functions, things like feeding yourself, bathing yourself, transferring in and out of bed and onto toilets and stuff like that. There's a whole list of things. But if you qualify for the long-term care and you have that as a part of your life insurance or even a standalone long-term care policy, the way that works is if you have the right one, there's some really good ones out there. There's some ones that are not so good. We've got the best. And so I say that, I've got about 315 companies on my platform. We've got some really, really good ones and ones that are generally regarded as the best in the industry. Those types allow you to either get cash if you want to stay home. Now, picture yourself or picture a parent, right? If you have a parent that maybe you don't necessarily want to send them to an assisted living facility or a nursing home or something like that. You want them to be able to stay home. Well, you're going to have a nurse come in, and that's going to be expensive. So long-term care with a cash indemnity option allows that client to be paid money to be used for whatever they need for the care while staying home, which is pretty cool. Not a lot of people are excited about the idea of leaving their home and going to an assisted living or nursing facility. So the ability to stay home, but have cash coming in through a long-term care policy to pay for a nurse, to pay for hospital beds, to pay for equipment, maybe remodel an area of a house to make it ADA compliant so a wheelchair can fit. All those things can be done with long-term care. Or thousands of dollars a month can come in and can be sent to a nursing home to pay for a nursing home. And so we see lots of situations in our industry where people fall into that situation. They need some assistance. They need some care. And they don't have the ability to pay for it. So now we're in a situation where we got to look at selling mom's house to pay for putting her into some type of facility. The facility is a tiny little dorm room size room. And we've all been there. I don't think anyone loves the idea of a loved one being in a nursing home. Certainly, there are some of them that are nicer than others. And if you've been to a bad one, you never forget. So with that being said, long-term care, living benefits, life insurance, it's a whole new world. And that kind of goes along with our theme today being the health insurance episode. It's a whole new world of health insurance. And so I'm excited to tell you a little bit about health insurance, tell you about my personal experience with health insurance, but also bring on our special guest today with Revolt Healthcare, Mr. Ben Jones.
Hey, what's going on, Brandon?
Hey, Ben, how's it going? I want to introduce you. I met Ben a while back and was instantly impressed by his knowledge of all things healthcare. I think in the healthcare space, it can be very frustrating because if you're calling a big company, sometimes you're calling 1-800 line and there's not really anyone that's going to take the time to break things down, really explain them. I'll be honest with you. I had very little knowledge about healthcare. It was just an area of my life that was just generally a frustration. I didn't really understand how a lot of it worked. And so I was so impressed by Ben's ability to really explain it at a high level, but break it down in a very simple way. So Ben, welcome to the show. Appreciate you joining us.
Yeah. Thanks for having me on. Yeah.
Awesome.
And you bring up a good point too. I mean, that seems to be a common theme that everybody seems to have that same frustration around their health insurance, right? I mean, just not knowing how it works, being too expensive for not knowing how it works, especially. I mean, just if there's benefits whatsoever. I mean, there's so many different key components to health insurance that you really kind of have to understand. And yeah, I mean, it's a little different.
It is. Yeah. It's not, again, like I say about money all the time. It's not something we were taught in schools. One of these days, a legislator or someone is going to hear all of us continually say this, and they're going to build a curriculum in high school that's going to be, financial literacy, health insurance. I mean, it's going to be all the things that people actually need. I mean, granted, I use calculus every day, and that was a wonderful course. But I mean, the things that we need day in and day out, it's wild that none of this stuff was taught to us. So with that being said, Ben, tell us a little bit about your background. I'd love to get to know you a little bit.
Well, so originally, like you were talking about earlier, I'm actually from, I guess, what used to be a small town. I'm from Kansas. I remember we used to have a handful of red lights, and now there's a red light for every stop sign in all of Carrollton. So it seems to be going really fast. But, I'm originally from Carrollton, Texas. I have done quite a few different things. But when I got into health insurance, part of the big reason I got into health insurance was I was getting a little older. I was about to get kicked off my parents' plan. And so I started looking for my own health insurance. And I realized real quickly that I knew more about health insurance than the person who was actually trying to help me get the right plan. And so real quickly, I realized there was a need for the education in it. So I had to start doing a lot more research myself and finding out more things about how deductibles work and how copays and coinsurance and all that different stuff would work. And I just started having a lot of friends approach me and say, hey, what did you do for health insurance, right? We're all getting kicked off our parents' plan. What did you do? And then I really realized real quickly that maybe this is something I should venture into and kind of see what I can do to help other people. And so
absolutely.
It's funny because, like you're talking about with the health insurance space, it's really not based on education, right? It's not based the same as the financial side, right? People don't educate us on finance. They don't educate us on insurance. And so same thing. When I first started in health insurance, I worked in a call center and I started working. It was very fast paced. I remember that if you were on the phone for more than 10 minutes at this call center, they'd actually come hang up your phone because they said you were talking too much. And I just didn't like that model. I didn't think it was informative to people. I didn't like being able to say, hey, look, it's Blue Cross Blue Shield, $700 a month and no copays, deductible $10,000. And do you want it or not? That was their style. And I just didn't really like that because it didn't seem to help anybody. It was just a big money grab for a lot of different people. So when I eventually ventured out, I still worked with Blue Cross, just in a different level. It was really all about education, right? Showing the customers how the copays work, explaining how the deductibles work, when they come into play, that types of stuff. And we really went more education based, and was very successful with Blue Cross Blue Shield. We went through the different communities here that are local and kind of showed them what that looked like.
Nice. That's awesome. That's,
Yeah.
The education approach obviously is, something that I wholeheartedly believe in, and, why more industries haven't figured that out. I don't know, but that's okay. That keeps us relevant, I guess, that we're the, part of the small majority that actually educates. So,
yeah.
So in the world of health insurance, let's talk about, the topic, or the word major medical. That would be like Blue Cross Blue Shield, Scott and White, those big companies, right?
Right. And so it's funny because major medical has been a term that was coined by the government. It kind of has strong armed us since the 90s into taking these lesser, HMO, PPO plans. Now they're HMO plans nowadays, to where it depends on the state and everything you live in, right? But in Texas, if you go and buy a plan that's major medical and it's not from your employer, it's probably going to be an HMO plan, which means you have that confined network of doctors, right? So if you go out of that network, there's typically no coverage whatsoever. But it really, there's a lot of different things to it. But a lot of people think that because we're an indemnity plan that we don't cover those major things. But one thing I like to point out to everybody is, hey, look, our plan covers preventative care. It covers 20 doctor visits per covered family member, all the way up to those major things like heart attack, stroke, cancer, surgery, hospitalization. All of that major stuff is included too. It doesn't mean because it's not major medical that it's not going to cover those major things. It just may cover them a little bit differently.
Yeah, that's one of the things that I'm glad that we were able to talk a little bit about, because I think as a guy that didn't know a lot about health insurance especially before I got into the financial industry, you just kind of assume that you have to go with either what your work provides, or you have to go with, maybe a Scott and White plan. And certainly there might be very specific situations, like a situation where my wife is pregnant for a couple of months. Obviously she's pregnant, where sometimes those plans can be useful. But I think the majority of us, you just assume, well, this is what my work provides, it must be the best thing. And there's not really other options out there, but there are a lot of other options out there.
Yeah, that's the crazy thing. So, I mean, we work with indemnity plans specifically. And look, I'm the first person to tell someone, hey, look, this plan may not be for you, right? I'm the first person to say with your situation, your wife, right? If her situation, she needed something different. So we looked at all those different options, reviewed them, and we found out what was going to be the lowest cost to you and your family total, right? Not just on healthcare premiums, but healthcare cost, right? I always try to tell people, look, my job is not to sell you health insurance. My job is to lower your total out-of-pocket healthcare cost, whether that's through lower monthly premiums or better benefits, or in most cases, a combination of both. So, we can take a look and review anybody's health insurance. And I'm very quick to tell somebody there's a lot of different stuff out here. The other thing to kind of point out with some of these major medical plans is we already had coverages like this before, before 2014, when the Affordable Care Act mandate came out. We had what was called a high risk pool insurance, to where if you already had something happen, you could get that coverage. They still offered it beforehand. Now it seems that everybody has to have it, right? But that's not really the case, right?
Yep.
So, go ahead.
No, I was going to say, to your point, you're right. There's so many options out there, and if you can, for me, I always, you've heard me say this before on my shows. Listen, I don't recommend strategies, products, even people that I haven't vetted out. And so, when I first heard about Revolt Healthcare, a lot of people that I know jumped on it right from the get-go because they had a need. I had a different coverage that I won't say, but a coverage that I did not love at all. It rhymed with US something or another, but I wasn't really happy with it. And I was constantly frustrated every time I went to the doctor, it seemed like it was an issue and they couldn't verify my coverage. And so I just assumed that this was the world of not having major medical, that if you provide your own health insurance, it's just frustrating for all of us. And then I learned, I'm like, it's not. It doesn't have to be this way. But I sat and watched what you guys were doing over at Revolt for over a year, and would check in with people in my network that I knew had your coverage, and consistently across the board, everyone's like, oh, I love it. I love it. I love it. So then I reached out to you and said, hey, I think it's time to make the switch. And then that began our conversations. And then, at the time my wife was pregnant. So we decided we got strategic, and we did two things. To your point, we massively lowered my overall cost of insurance, but we also increased our benefits and increased benefits in a major way for my wife while we have the need. And so that saved, I would guess, somewhere in the neighborhood of probably $10,000 or $12,000 that saved me.
Wow.
All things considered, between lower cost and better coverage of what it would have cost me out of pocket for a pregnancy. So obviously this area, especially Melissa, a lot of growing families. And so that's a big deal to have someone that will say, hey, let's pull you off this plan. Let's put you on this plan. A lot of you guys don't know that the plan that my wife is on is, Ben didn't make any money on that. He didn't. He actually recommended her not be on that plan just for a few months while she's pregnant and having the baby, and then we'll bring her back on. So that said a lot to me in terms of ethics, and I was really happy with that. So me personally, as a client, have been extremely happy, and it's one of the reasons why I reached out to Revolt when we started the show. I said, hey, I think this will add value to people, and I'd love to have you guys, as a sponsor, and love to highlight the great things you guys are doing in the community.
Yeah, I appreciate all those compliments. It's all about doing the right thing for people. The way I look at it is, would I sell my friends and my family this policy, or would I personally be on this policy if this was my situation? And if I can't say yes across the board on that, then I'm just not going to recommend it, right? And another thing I like to tell people is, you brought up another coverage that you had before that was fairly similar. It was not major medical, is another indemnity plan. I always try to tell people, look, not all indemnity plans are created equal, right? It's the same way that not all major medical plans are created equal, right? You might like your Blue Cross plan a lot better because your doctors and everything are in the network, but you might hate United Healthcare, right? Every plan's a little bit different, and each one will fill different needs. And one of the big things I've heard with the horror stories of other people going on different coverages is, oh, well, here, I'll give you a real life example. I had a customer when I used to work back with Ambetter, Superior Healthcare, another major medical group, right? They offer what's called an EPO, which is the newest version of an HMO, still limited network. You have to go in that network. If you're out of network, no coverage. Well, I had a lady that was over here in Rockwall, Texas, and her and her husband, they lived almost smack dab in the middle of two hospitals. One was in network, one was out of network. Well, the out of network hospital was exactly 1.1 miles closer to their house. So when the ambulance came and picked him up while he was having a heart attack, they took him to the hospital out of network. And unfortunately, they had no coverage, right? They went in there. Unfortunately, her husband passed from it, and she got stuck with that huge bill for a heart attack. And there's really nothing that she could do because she was out of network with that coverage. So the other thing to kind of point out, across all boards, right? Not all insurance plans are created equal. We want to make sure that where you're going is going to be a network, or it's going to be able to be used out of network. And that's part of the biggest thing that we provide with having a PPO coverage is you can use it nationwide. We have a network that's 960,000 plus access points in all 50 states. So, pretty good chance you're going to be in network anyway. But in that rare case, like this lady's case, even if she was out of network, they would still pay that same bill. They pay the exact same benefits.
Wow. Yeah, that's really cool. The cash indemnity thing is something I wasn't really familiar with, but and hadn't even really used. But my daughter's daycare was requiring, she needed an updated one of her vaccinations was coming up to be due as she was getting close to turning 4, and we took her in and did a general checkup. And what's pretty cool about that is the cost of the checkup was less than the benefit, so I actually got a check for the difference. And so that's pretty cool because, if you start subtracting some of those checks and, if you've got kids, they're going to go to the doctor, things are going to happen. You're going to get sniffles and bumps and bruises. And so being able to actually get a check back for the extra was actually really cool. And so if you put that back towards the overall monthly cost, it just discounted it even more. So
Right.
I was looking at some statistics that you guys have put out, and the average family spends $21,342 a year on health
Right.
insurance premiums. I mean, 21 grand. You're talking about, you got to, that's probably a typical family, husband, wife, or a couple that has a kid or two. So you're talking about, that's a significant chunk of money. That's right up there with your mortgage and your car, one of your top 3 or 4 expenses probably all year, right?
Yeah, we found out that it's actually the number 1 or 2 expense, depending on what someone's mortgage or rent payment would be every month. So, I mean, across the board, that's horrendously expensive. And that 21,000 figure that you're talking about is just the premiums. That's not even including if you have a crazy deductible you have to meet before you start getting benefits and all that kind of stuff. And I mean, I guess I can tell you the way I found this plan myself was, again, back in 2014 when they started the Affordable Care Act. There was a big promise: you can keep your doctors, you can keep your hospitals, nothing's changing. And that was true for that exact first year. That was true. But after that, it changed tremendously. The next year, my premiums went up by 50%. I think it was 52 to be exact. And so I was paying about $200 a month for myself. And then what happened was I went up to $300. So I jumped an entire $100 up a month. And I was thinking, well, geez, this is pretty expensive. And my deductible went from being a $3,000 high deductible at the time to now being low deductible, right?
Mm-hmm.
So I think that next year my deductible jumped up to like $6,000 or something like that. So meaning I had to meet this deductible before I started getting any benefits.
Right. I'm glad you said that, because one of the things I was going to ask you is to take a second and explain. I mean, a lot of you on the call, you may be more experienced than I was, but I really didn't even understand how a deductible works. So talk for a second about like what a deductible is in insurance and health insurance.
Well, so they're different amongst different plans, right? So traditionally with your typical major medical plans, you may be paying $1,200 a month for your family, but then you also have a $8,000 deductible you have to satisfy before you get any benefits whatsoever. In most cases, there was actually a study done, I believe it was from Farmers or State Farm. They said that 6 out of 10 people admitted they don't even know what deductible means. And the running joke is that 4 out of 10 people are lying about knowing what it means. So, but what that means is you typically will end up having to pay that deductible before you start getting anything other than your preventative care. Sometimes you might get copays to the doctor. Very rarely do you get them to the specialist, but pretty much everything else, you have to pay a deductible before you get any benefits whatsoever. So with our plan, the biggest difference is that the only time you actually have to pay a deductible is if you stay more than 24 hours in the hospital. So even if you go in at 10 a.m., you're out by 8 p.m., you still don't have to pay your deductible. It's only if they keep you more than 24 hours that it even comes into play. So there's no deductible for, your doctor visits, prescriptions, even outpatient surgery. There's no deductible for that type of stuff.
Yeah, that's really huge. And yeah, I didn't, I remember at the time, looking at the paperwork, I'm like, copay, deductible, like, what is this stuff? Like, it's just a different language until you really get some experience in it. And I was just thinking while you were saying that, I think there's a lot of people, I know even people in my own family who are now on Revolt and utilize you guys' services, that made the decision, now that the individual mandate isn't in place, they made the decision just not to have health insurance. They're just rolling the dice gambling because of the assumption that it was going to be $300 or $400 a month, or $500 or $600 a month, or maybe they looked into it. I know one particular family member was quoted like $950 a month for him and his fiance, and they're in good health. And on Revolt, it was half. It was actually a little less than half of that. So they went from just having no coverage, which, as we know, could be catastrophic, to now having coverage. And the data, I obviously I'm a data nerd. I love numbers. The data is that there's 20,000 plus lawsuits every year filed against patients. And I know Scott and White in particular, where I lived before I moved in Dallas was the heart of Scott and White country in Belton,
Right.
Texas, north of Austin, but south of Waco. It was tough. If you wanted to go to a doctor outside the Scott and White network, it was really tough to even find one. They just took over the whole area. But even, we've got a lot of family members that have worked with the Scott and White organization, and their attitude and the way they pursue people for outstanding bills has gotten very, we'll just say very aggressive over the last 5 years. They at one point, I'd heard a figure, they were writing off a couple of $100 million each year of just unpaid bills. And I think they've pretty much made it their goal not to do that anymore, that they're really coming after people. And so that's scary. We know that they say that over 9,000 plus patients a year have their wages garnished by hospitals. You're talking about them getting in and taking your paycheck before you get it. And then, there was a study that showed over 530 families had to declare bankrupt. 530,000 families in America had to declare bankruptcy due to healthcare bills.
And that's just annually.
Yeah, annually.
That's annually. So,
that's a tremendous thing. And I think all of us have gotten that bill out of nowhere for a couple of $1,000 from an emergency room visit or something like that, where you're like, what? Like, oh my gosh, like I wasn't expecting this.
Yeah. So, I mean, I've had those bills come in myself for a couple different things that I had going on, but it's crazy because I used to service a large population of the Latino community here in Dallas, from where I used to live. And I remember the number one thing I used to hear people say is, well, if I get sick, I'll just go to Mexico. Or I had a guy that was from France one time, and he said, hey, we have socialized medicine in France. If I have something happen, I'll just go to France. And it finally struck me because, I started thinking, what happens if you have a heart attack? Are you going anywhere other than the hospital across the street from your house? Or are you going to another country to get service? Are you going to go to Canada or France or Mexico, or where are you going to go? And then what's going to happen if you don't have insurance? And I think really the biggest reason people do it is because it's so expensive, right? They think, hey, if I look at this option, it's going to be $950. I already looked. There's no other place I can find health insurance. And, that's just not true. There's so many other avenues that you can search. And I mean, first and foremost, you can call us and we'll try to find what we can find for you, right? Whether that be us or, like in your wife's case, it was Scott and White. It may be the best situation to have her on Scott and White. It may be better for you guys to be with us. But we will always shop that around and see and try to come up with a realistic expectation of what it should cost. But the other big thing is our coverages are very customizable. So, let's say you can't afford a plan that's got a $5,000 deductible. Keep in mind, it's an inpatient only deductible. So very rarely you're going to have to pay it anyway. We can still look at our other options of $7,500 or $10,000, which would lower that total out of pocket cost. And sometimes, our initial quote will come back and it's too high for somebody. So we try to work with them to really customize that coverage down to where it makes sense for them financially, something that they can afford, because it does no service to anybody to get on a plan that's too expensive for 1 month and then cancel and not have coverage for 6 months and then hop on, hop off, hop on, hop off, right? So we want to make sure that we find something that's within your budget and that's going to actually fill your needs in the event of something, especially catastrophic, right?
Absolutely. Well, that brings to mind a particular client that was a teacher. And so I mentioned at the beginning, if you're a teacher, if you've been listening, this is for you. We had a teacher, we'll change her name. We'll call her Sarah, over in the Carrollton area. She was in the teacher's healthcare plan, which again, nothing wrong with that, but it is a bit pricey. She was paying $1,300 a month for her family of 5. And so, again, I mean, that's a mortgage. And, hey, listen, if you cut that in half, half of that's like a lake house, a small property or lake house, that's an RV payment or something. I mean, you're talking about, the ability to take some of that money and do some good. Hey, that's, you cut that in half and then you get that money growing in a compound interest account. You're talking about that turning into hundreds of thousands of dollars available to you in retirement. So we're talking, this is big time stuff here. Right. So she's paying $1,300 a month. Looking at ACA plans, she looked at some of the the med share type plans and stuff like that. A lot of those, I looked into those personally, and sometimes they're expensive, sometimes they're really cheap, but then you really start digging into them and they don't cover a lot. And, they have the ability to decline coverages, especially if it's something that maybe whoever the committee that approves those things, if it's something they don't morally agree with, there's lots of things that can happen there. So,
well, I'm glad you mentioned those health share plans too, because with those health share plans, that's one thing a lot of people don't realize behind the scenes. They have to call them health share plans, and they can't even call them, premiums, right? They can't say, hey, you're paying premiums. This is your donation, right? This is not your deductible, it's your cost share, right? They can't call it that stuff because it's legally not insurance, which means it's not regulated. And so what happens behind the scenes is, God forbid I have a heart attack and I'm on one of those plans. Well, a big board or committee, like you're saying, gets together and they vote on, hey, we're going to decline or approve these people's coverages, right? And, it can be for a number of reasons they decline coverage. They could just say, hey, look, we don't have the funds to do that. We would rather help these 10 people than to help this one person. And they can kind of vote that way. And since they're not regulated by anybody, they can deny coverage, like you're saying.
Mm-hmm. Yeah. And not like you said, lack of regulation denies you much legal recourse to really be able to do anything about it. They are kind of the judge, jury, and executioner there. And I've heard some stories, of things happening and, where things got denied. I know I've got a lot of friends that are really happy with their plans that they have like that, but then I've heard the other side of that too. So in this particular story, we're talking about Sarah. This is a real story, by the way. So she wasn't happy with the stuff. She was looking with some of the religious plans. And, she came over and had some conversations with Revolt after looking at, costs, benefits, seeing what they needed. They end up paying $521 a month, down from $1,300 for her husband, Matt, and their 3 kids. And that's outside of her teacher's healthcare plan. So right now it's open enrollment for a lot of teachers. I know that time is of the essence. So if you're in one of those situations where you're about to have to make the decision, they're about to draft your first paycheck for the health insurance stuff, I've got a link running that you can get a quote at the bottom. So this link's been probably running for the last 15, 20 minutes. You can click on that link, or you can Google up Revolt Healthcare Alliance. Either way, tell them you heard about it on the Compounding Communities, the Brandon Lakey Show. And, most likely it'll be Ben or someone from his team. One thing I'll speak on real quick, Ben's team is phenomenal. Couple episodes we had Mark and Ben are both, business partners in this, both owners. They're phenomenal. But then their team is phenomenal. And so really anyone you talk to within their team, they're education based. One of the big things that I said to them that I appreciated so much was the fact that every single person comes from that educational background. They will take the time, explain what the coverages are. And so that's huge. So if they can save you some money, that would be phenomenal. If it's something you're already paying for. And then
it's funny, I think I know exactly who you're talking about when you're talking about this lady, Sarah. So it's funny because a lot of teachers, they think, hey, look, it's very inexpensive for me, but it's very expensive for my family. And so if this is the same person I think we're talking about, it was about $1,320 a month for her and her family of 5. And I actually helped this lady out myself, so I think I know who you're talking about.
Yeah.
But she was paying about $1,320 a month or so, something like that. But it was very inexpensive. It was about $20 a month was her premium herself. But the extra $1,300 was coming from her husband, right? It was very expensive to add her husband and her kids. And what we did is we went ahead and looked at what it would cost to keep her on the plan through her school district. And every school district's different, right? Every school district has different contribution levels. Some are more, some are less. In her case, she only had to pay $20. So it's really hard to beat a $20 a month plan, right?
Right.
So what we did is we looked at how much it was costing her for her family, which was the remainder of that money. And we were able to take that down to $500. So when you combine them back together, $500 for her husband and kids and $20 for her, that's where we got that 520 figure. Now it's not always like that. Some teachers, I just helped a couple teachers in Dallas ISD here local, and it was very expensive for them to be on the coverage. One of them, it was about $30 more a month through the Dallas school district, but huge deductibles they had to pay first, way less benefits. So it made more sense for her to come on with us. The other one, in the other case, it was for her alone and it was her and her daughter. It was horrendously expensive for both of them to be on the plan through the school district. So what they did is they quit using the TRS program and came over with us. So yeah, there's a lot of different options. We'll make sure we review everything with everybody to, again, ultimately lower those healthcare costs.
Yeah. Well, I was while you were saying that, I was just playing around with some figures, and that's a $779 a month savings. If that went into something that's been averaging a decent rate of return, you're talking about over the next 20 years or so, if she were to save and get that money growing and compounding, just the savings from her health insurance growing over $500,000. I mean, so for someone to say, I don't know if it's worth it to me to try to save some money, being able to save money for things you're already paying for is a little known trick of the wealthy. Wealthy, they have teams of people, and they're constantly shopping. They're constantly trying to operate as lean as possible. So, and then as you've heard me say before, make sure you have every dollar you have working as hard for you as you are for it. And so that's
and kind of to, point this out too, of course, we talk to a lot of teachers during this time of the year, especially being that their open enrollment is, again, depending on your school district and everything else, most of them are ending at the end of this week. And so we still have time to at least review it. It's still worth looking into. But one of the other big issues that we've seen is teachers will say, hey, look, you don't know what this $700 or this $400 or $200 a month will do for my family. They turn around and they need to save it or invest it or what have you, because again, the retirement program that they have, is not nearly as great as $500,000 sitting on the sidelines ready for them to go when they are ready to retire with you. So that's another really big point to make here is, you can take that extra savings and you can have it for your retirement later without having to change your lifestyle up at all, right? Not having to cut back on the Starbucks or the, eating at this restaurant 2 or 3 times a week or something like that. If we're able to come through and instantly open up $500, $600, $700 a month, we can turn them around back to you guys you guys are the financial experts, the wizards, right? And you guys can turn around and make that money compound for them. And then they have a retirement plan right there for them.
Yep. Absolutely. It's a lot of fun. When, going back to the way that, wealthy and high net worth people operate, interestingly enough, growing up, I felt like a lot of people in the middle class, they kind of bow their chest out and say, I'll just go it alone. I'll figure this stuff out. But it's not how wealthy people do things. And so people say, well, the rich just keep getting richer. And that is absolutely true, because they figured out how to win the money game through compounding interest, which is another topic, but they also have teams of people. And so that's one of the things I love about what I offer and what we offer is within our network, certainly financial education, getting money growing, but also helping you save money on your existing insurances, bringing a CPA tax advisor into the conversation, seeing if we can lower your taxes, maybe save you some money. You're talking about, freeing up an extra. I mean, imagine what freeing up $1,000 a month of what you're already paying for would do in your family. So it's worth the exercise. I know sometimes people feel like, wow, I'm so busy, I don't know when I'd have time. Hey, it's worth it. Trust me. If we can free up a couple $100, $1,000, I mean, we've freed up a lot more. There's certainly those crazy examples of freeing up a few $1,000s a month for people, but it's very common for us to free up $500-$600 a month for a client.
It doesn't cost anybody to reach out to us, and we're always willing to offer them the support of whatever it is. It just, like you said, even if we don't get to make any money doing it, we just get to steer you in the right direction and help you guys out. I have kind of a running joke. I tell people I don't do it for the money. I do it for the Christmas cards. And, I tell people that because I really do enjoy getting to help people save money and getting to see what it does for their family, right? I get Christmas cards all the time from people saying, hey, you don't know, I was able to put, toys under the tree this year because of the extra $500 I saved this month or whatever it is, right? It's great getting to see that kind of stuff and getting to see what the money actually gets to go towards. And in your case, getting to see it compound like that.
Yep, absolutely. It's a lot of fun. We had I had a conversation with a client yesterday, actually, and I tell you what, by the end of it, I was in tears. And this particular client, she had been to the Philippines and had the opportunity to volunteer and do some mission work, help people, and actually specifically help young women that were sometimes in some bad situations in terms of pregnancy and healthcare and stuff like that. And as I got to talking to her, she started telling me about, this impacted her so much that at the time, married with children, she went back to school, went all the way, put herself through nursing school, then got a job as a nurse with St. Joseph down in the College Station, Bryan College Station area, excuse me, and has been working as a nurse, learning and trying to be a well-rounded health professional, all that so she could go back to the Philippines and by her description, she said, feel like I would be living my purpose, why I was put here on this earth to help these young women and to help make sure that people, just because of the color of their skin or because of the tribe or because where they're from, that they're not treated like they're absolutely worthless. And I thought, wow, how powerful of a goal is that? But there was one piece that was missing, and you may know what the piece that was missing, which was the money. Mm-hmm. The money to be, she has to go to work because she has bills to pay. Mm-hmm. And so we were able to talk with her about this kind of holistic approach of saying, well, hey, what if we can save you some money over here with existing insurances? What if we can save some money over here with taxation? Let's look at some different areas. And then what we were able to do is make a plan to where now she's on a plan to retire early, well before she thought she was going to, with the ability to take a distribution from her retirement stream and be able to really go and do that. And and I just thought that, awesome. Hearing her talk about that story, and seeing the passion and I was inspired by someone that would have the drive and the work ethic and have that kind of a calling and a dream to want to give their life to others in that way, to put themselves through nursing school. And so I was thinking about that. I'm thinking, how many people, how many of our listeners, you have a dream like that. You have something a big dream, an impact, something you think that you can offer the world that would make you feel incredible if you could do this. And how many people have that one singular thing standing in their way from living out that dream, being money. And so if you can, back to kind of bring everything full circle. So I'm trying to say, to bring everything full circle, if we can educate you on this stuff, if we can help you, if we can take monies and save monies and harvest monies from insurances and stuff you're already paying, and that you can go do things, travel, do mission work. Wow, if we were all doing that, if we were all truly doing things that we felt like we're living out our purpose, I just got to feel like the world would be a much happier place, and the world would be a much better place for all of us to live. And so, with that being said, reach out to Ben and his team. They're phenomenal people. It's a phenomenal product, but they're phenomenal people. And so, Ben, I want to thank you again. Any closing remarks?
No, like you're saying, it's always worth reaching out and just to see what we can do for you guys. And I think that's really it.
Awesome. Well, thank you again for the time. And I know you're busy, running, a million miles an hour. We got a lot of, I know that, just in people, I know a tremendous amount of teachers have reached out to you in the last 24 hours and trying to really make sure that they're making the best decision in terms of their hard-earned dollars. So, with that being said, the last couple of things here, just listen, a shout out for obviously, if you're in the community and you'd like us to highlight your sports team, your group, your nonprofit, if you've got some kind of charity thing coming up, would be happy to shout that out. My goal in this radio show is just to put out good. I want to really highlight the amazing things that you guys as our listeners are doing. And I think if we all do that, if we all lift where we stand, we can continue to build incredible communities, and we can do great things. And so today's topic, healthcare, was certainly a big part of that for all of us. It's one of those things we all need to have. So with that being said, this has been the Brandon Lakey Show, Compounding Communities, brought to you by WealthWave, the How Money Works company, and Revolt Healthcare. You guys have a wonderful day. Bye-bye.